So, you want to get rich in the stock market, you want to invest, but you don't know where to start. In today's video, we are going to be breaking down index funds, ETFs, what they mean, how you can get started in the market, and how this has actually made generational wealth for a multitude of people. Again, this is proven over a long span of history of the easiest ways, or in my opinion, one of the easiest ways for new investors or investors that don't really want to invest in individual stocks, don't want to do a whole bunch of research, and want to outperform 90% of nearly all actively managed index funds or investment funds, other than index funds, I should say. So before we dive into this video, make sure to smash the thumbs up button. Again, if you watch any video on this channel, I really recommend you stick around and watch this one all the way through. That way you can get started in an easily simplified way that has a great return on investment. Furthermore, again, make sure to smash the thumbs up button, subscribe to our YouTube channel, leave a comment. Do you own any index funds, ETFs? What are your opinions on my picks? We're going to be diving into that. Furthermore, let's dive into this right now, brothers. Alright, so first off, according to a 2022 report, over a 15-year period, nearly 90% of actively managed investment funds failed to beat the market. Portfolio managers are often Ivy League educated investors who spend their entire workday attempting to outperform the stock market, when really all you could really have to do is invest in an index fund or an ETF, and it's an easy way to increase return on investment. So with that being said, we're in a very unusual climate right now as far as the financial atmosphere. There's a lack of interest in traditional investing, which is proven to make people rich, like Warren Buffett, and using compound interest to your advantage. And investors are taking more risk, but however, when we have these market crashes like we are currently in, the long-term investor will always end up winning, so that's important to keep in mind. Now, let's dive into what is an index fund. So an index fund, you can buy lots of different stocks at the same time. So think of it like a basket of owning some of the best performing stocks in, the USA or whatever market you choose to invest in. And you can buy a smaller percentage, or a fractional shares like they call it, in an easy and simplified way in these index funds. Additionally, they're very cost effective, and as I mentioned before, they are used for building long-term wealth over a long period of time, and they're far less volatile than individual stocks or cryptocurrency. And again, they can track business size, type, location, and currencies as well. So in today's video, we're going to be addressing my 3.5 favorite index funds, so stick around for that, and let's dive into that right now. Now, number one is the S&P 500 index. So what is the S&P 500 index? Well, on average, it returns about a 10.83% over the last 50 years from 1970, which is a great ROI, great return on your investment. And you have to take in consideration your compound interest will continue to compound, and you can really retire with millions of dollars just by dollar cost averaging into the market. Now, the S&P 500 has a lot of tech stocks in it, so you're going to own small fractional shares in Microsoft, Apple, Amazon, Tesla, Alphabet, etc., even at Nvidia as well. So again, the S&P 500 index is number one. Again, its historical returns are about 8 to 10%, and what it does is there's 505 stocks from the 500 biggest US companies. Now again, there is strict requirements, and it's extremely diversified, which is really why I love index funds. And as I mentioned prior, it does include a lot of tech stocks, but as we know here at Brotherhood Finance, we know that there's going to be an extreme and immense amount of innovation in the future, so having some tech stocks isn't that bad either. Now, what you want to really look for as well is those dividends reinvested. If you look at this chart right here, dividends reinvested is very imperative, as it will increase your return on investment and its passive income as well. Now, my favorite two are the S&P 500 VOO index, VOO, and also the FVIAX. These are my two favorite Vanguard ETFs and index funds. So again, VFIAX and VOO ETF. Now, what is an ETF? An ETF is an exchange-traded fund. And with an ETF versus an index fund, ETFs can be just bought like stocks or sold like stocks on a given day. However, index funds are bought in full once per day, and ETFs offer fractional investing, as well as I said before, ETFs can be bought and sold just like a stock. So that's number one, again, the VOO and the VTIAX. Number two is the total stock market index. So you want to own a larger fraction of the stock market. You really believe in the US economy. And again, brothers, before we keep diving into this, I want you to say these are my personal favorite index and ETFs. This is not financial advice, this is financial education. information. We're trying to inform you, trying to get you involved in the market, and I really hope you enjoy this video, as this is a great stepping stone, and really for massive investors as well. If you like to own small companies, you can own the small companies, and then you can also have a large fractional share of some of these indexes as well. So number 2 is the Total Stock Market Index, or the VTSAX, which is the Vanguard Total Stock Market Index. And I also like the Vanguard VTI as well. So those are my 2 favorite top picks that I just mentioned. And again, with ETFs, they're also a great investment as well. As you know, they're more, you can sell them like a stock. You can get out of, you can get in them more accessible. But with an index fund, you also, have a larger basket. Think of it like as investing in a basket of stocks or equities where you own a small fractional share, which gives you great diversification and a great return over time. And you, again, as I mentioned before, you want to look out for dividends. Dividends are very important. Number 3 is the Emerging Markets Index. Now, why do I say the emerging markets? Now, before we dive into this, I want you to keep in mind that obviously there's other countries other than the US that are really growing their GDP and have great industrial and technological advances coming in the future. If you look at China, for example, at number 2, their GDP is about 12.238 trillion with a 6.9% growth. India is big, Brazil is big. Now, with that keeping in mind, you have to understand that the emerging markets ETF is probably the most risky or speculative one. But again, it's predicted to be on the rise by some experts. And as I said before, it's much riskier markets as they are quite more volatile and there's a higher population. But in my opinion, my favorite emerging market is the VEIEX. That is my favorite one in the USA. Again, it's important to understand that a lot of these countries are also growing, and even if they're all in a recession, or we're in a recession right now, it's a great time to really put your foot in the door, get started, and buy it while it's low. That way you can increase your return on investment back on the upside. Now, 3.5 is something I've seen viewers, a lot of people check in, and this is the METAVERSE Index. Yes, we've heard about the Metaverse. We've heard about how it could really drastically change the financial system and the ecosystem overall, and I think it's just really growing rapidly. Now, these are some of the tickers that are involved with it, like Nvidia, Roblox, Microsoft, Meta, Amazon, Qualcomm, etc. Although I don't like all of these companies, a far amount of them are great investments in my opinion, and investing in the Meta Index is awesome. So the ticker is META, and it's on the NYSE primary exchange. However, with this one, again, it's probably one of the most riskier other than the emerging markets. However, it has an expense ratio of quite high, which is 0.75%, which doesn't seem like a lot. We've taken consideration that as you continue to compound and compound, you have 10, 6 figures, $1 million, those expenses really start to eat up. So that's something you got to look out to as well. And if you don't like index funds or ETFs, check out some of my favorite investments and some of our prior videos. I break down some of my favorite stocks that are more smaller cap, as I like to invest in smaller companies with great financial teams, great returns, great PE ratios, and I like to, not necessarily be a huge risky investor as I am diversified overall, but I like to buy the small market caps that I believe have higher return investments in the future. Now, again, my 3.5 option was the METAVERSE Index. There is huge potential profits, and the Roundhill investment offers a Meta ETF, as I mentioned. However, it is highly speculative as well, with an expense ratio of 0.75% again. All right, brothers, I hope you found value in this video. As always, if you missed some of the information and content that we went over, make sure to check it out. Go back and rewatch the video. Again, if you want to check out some of my other favorite investments, if they're small market cap companies, stuff like that, make sure to go and check those out. And if you enjoyed a video like this, make sure to leave a comment down below. Do you own any of these ETFs? Do you own any of these indexes? I would really like to know, what is your opinion on them? What is your opinion on the markets right now? Personally, again, I think we are probably in the midst of a recession, very beginning stages, and it's going to be a very interesting and exciting investing environment moving forward in the future. Again, brothers, I hope you found value in this video. Have a good rest of your day, a good rest of your weekend. Peace, brothers.